This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm Cory Wright.
And I'm Melisa Moretti.
And Melissa, today we have a great show. We have Gordon MacPherson of Elevate Development Corporation. Gord's been in the business probably for decades. And I'm not trying to age him. I'm just saying he's been in the industry for a long, long time. Started as a broker, now on the development side. Lots of great projects they have going on. He tells us all about, shares his thoughts and opinions on what's going on in the market, what market they're exciting at. And they've also got some great assets, both in the BC interior, down here in the Lower Mainland, and on Vancouver Island that Gord tells us all about.
Great conversation. Cory, I hate to say this.
Yes.
But I think something happened this week that was pretty exciting for you. And I care about you, so I have to ask, how was Nickelback?
How was Nickelback?
Did you go? I hope you went.
There are certain things in life that will come up.
Here we go.
That will happen that you make sacrifices for other people.
Right.
And Wednesday morning, my wife was terribly sick. And she couldn't take care of...
Happened to be sick on the day of the
to
Nickelback
her benefit,
concert.
she was sick leading up to the Wednesday. But Wednesday was the peak.
Right. She had to make sure it was believable.
Yeah. So Wednesday, she was unfortunately very, very sick and couldn't take care of our boys. So I had to drop the boys off at school. I had to work from home.
Okay.
I had to pick up the boys. And I had to give away my Nickelback tickets.
No, you did not.
I did not attend the show.
Wow. You know what? This really, speaks to your character. You are
honestly, I woke up today and I tell myself, I put my pants on one leg at a time.
Okay.
I'm taking it one step at a time right now, and I'm taking it one day at a time. But I keep telling myself, I will get over this sometime between now and 2027. But I did not attend Nickelback in Vancouver.
Wow. Well, you're on a...
Why do you seem very excited right now? Like you're taking pleasure in my misery.
A little bit, because I think you need to explore other options, other avenues.
Did you go to Nickelback?
You know what? If you gave me tickets, if you called me and you said, Melissa, I can't go, I have to give you these tickets, I would say, sorry, Cory, I have to vacuum underneath my bed. I can't make it.
Oh, okay, I understand.
Yeah.
I understand.
But
it's life-changing when you see Nickelback. I would put it up there for most people. Like if they ever got married or had kids, it's like right there side by side. Like that's what a Nickelback concert is. And I gave away the tickets. Unfortunately, I didn't attend. Gave away the tickets to one of our team members who went. And I don't know if he's been to Nickelback before, but he was raving after.
What a gift.
So he was very excited for it. So no, I did not attend Nickelback on Wednesday, unfortunately.
All right, okay.
But here's the good thing. The good thing is they've probably got 25 more dates across North America, so I can now have an excuse to go fly and see them.
There you go. Maybe they'll go to Calgary.
Maybe they'll go to Calgary. Maybe they'll go to like Austin, Texas or something like that. Make a weekend out of it.
All right. Well, good luck with that, Cory.
All right. Now that you're drowning in my misery and laughing at me that no one can see here. But without further ado, let's get to our interview today with Gordon MacPherson of Elevate Development.
All right. Let's go.
Enjoy, guys. This week's episode is brought to you by our great friends at Impact Commercial Group.
Really enjoy working with Impact Commercial. And we should say Al and his team can basically do anything when it comes to lending.
Anything when it comes under the commercial umbrella. You're building a building in development, we got you covered. You're buying land, we'll make that happen for you. You're investing in a property or a multifamily building, check. Owner-occupiers looking to acquire their own space, double check. Anything commercial financing you need, Impact Commercial is your go-to.
ImpactCommercial.ca. And we should say over 50 years of combined experience. So trust these guys. They're the right fit.
Best in the business, in my opinion. All All right, so we're here today with Gordon MacPherson, partner at Elevate Development Corp. Gord, how are you doing?
I'm doing good. How are you, Cory?
Good, thanks. Well, thank you so much for taking your time out of your day today. We know you're really, really busy, and we're thrilled to have you here. Can you maybe tell us a little bit more about yourself and obviously the development company?
Yeah, so Elevate was founded in the early 2010-ish. I had put together a number of deals on my own before Elevate, and I had a fortuitous golf game that was set up by a mutual friend where I got to meet the Wubbs twins, who Matt and Jason Wubbs started Westland Insurance. Well, they didn't start Westland Insurance; they were G2. So Dad created a brilliant model, and they took Westland into the stratosphere. And so they were looking at diversifying their own portfolio, and it just became a great situation where we started off talking about small deals, and actually our first deal was their head office in South Surrey, which was about a $10-12 million build.
Wow.
So we planned to start small, but we ended starting much bigger than that. The nice thing with Elevate is we started off as a merchant developer or redeveloper, where we would identify assets that had a value add component to them, whether it's tenants below market or redevelopment potential, adding more density. We tended to stay away from the raw land sites, and over the years we've done some of that. Although I would suggest our best deals haven't involved raw land. But the nice thing that I always had was I never had to go out and raise capital. So the first couple deals before I met the Wubbs family was much more difficult, where I had to rely on selling myself, selling the project. In this particular case, once the Wubbs came in as partners, I didn't have to raise that capital. The capital was always available. It more depended on picking the right opportunity and seeing it through the value add process that we were going to take it through.
Now, Gord, one thing that you had mentioned about your early days in the broker side is you were in the office leasing business. And before we kind of dive into all the amazing projects and assets you guys have, I would love to just hear your thoughts on the post-pandemic office leasing market. And I will say you guys have in my opinion, a prized asset located at Center Ice in downtown Victoria, the TD building there.
Yes.
I'd love to hear your thoughts as a broker who worked in that industry, but also now as a landlord who has a prized asset in a major city now. What are your thoughts on the post-pandemic office market?
That's a good question. I think from our standpoint, it's not a class that we're looking at growing. That being said, we've got no plans to sell the office asset that we do own. It's great. Like you mentioned, Center Ice. Center Ice is always going to be Center Ice. And I think those assets will prove to be much more resilient long-term. But I think the short answer is office is a class that we're staying away from. I wouldn't say we're staying away from it permanently, but I think that office is going to have to go through a process of reinventing itself. As we went into COVID, there was really this drive to maximize efficiency within office spaces, and everybody went with workstations, and it was about fitting in more bodies into a smaller space and kind of work their efficiencies that way, which became the least ideal scenario once we went into COVID, because everybody was interested in distance and closing doors and separation. And so coming out of COVID, I think a lot of companies are having to figure out how important it is to have people physically, staff members physically in space. And I do think more and more employers that we're dealing with or that we're talking to are planning on that being the case. But maybe it's no longer a 5-day work week. Maybe it's a 3-day work week. And maybe it's more of a hoteling situation where people come and they've got a desk for the day. They don't have that workstation or that office on a permanent basis. And then the other factor is going to be, as we move forward, what is parking arrangements going to be like? Office has always been among the highest requirement for parking stalls per 1,000 square feet. And that just in today's day and age, with the construction costs and the cost of land being what they are, developers are having to build less parking stalls. Municipalities and government authorities are actually also encouraging developers to build less stalls and put more emphasis on transit accessibility and other ways of getting moving staff in mass from home to work back. that sort of thing.
I can't agree with you more on the employer-employee standpoint of it, because I think it'd be a very challenging thing for employers to maintain retention of staff, corporate culture, all that stuff, if everyone's working from home all the time. So I definitely agree with you that I think there has to be some component of people coming back into the office, whether it be a couple days a week or whatever it is, hybrid models or whatever. But I think companies will suffer, I think, long-term if they don't have some sort of office component to it or staff getting together regularly to do it. One question I have for you, from someone who, your office is over here on the mainland street. I'm guessing from the office leasing component you did years and years ago was over here. How have you seen an increase? Maybe it's lease rates, maybe it's occupancy, maybe it's interest in the Victoria office market, say during pandemic and post-pandemic, that maybe you saw before that. Have you seen a shift where there's more interest in that market on the office leasing side than maybe what was, pre-pandemic?
By no means would I put myself out as an expert. I mean, we certainly have regular contact and dialogue with the brokers that are in that market. I think Victoria's a bit of a different animal because there's buildings, more modern buildings that have been designed to accommodate government uses, because it's really been driven by their office market's been driven by the government uses. And it has evolved. There is much more growing demand there has been much more growing demand on the tech side. So I know that it's been growing as a tech, and that's really comes down to livability. I mean, anybody that spent much time in Victoria will find it's got the mildest climate, it's got great restaurants and great things to do. It really is a fun city, and I think that would enamor itself to the younger workforce, which inevitably is who these tech companies are hiring. So I think that they're the drivers. There's simply been a move up in rates that we've experienced just with our project, because it was a market that had been, and most office markets had kind of been at a stable level for a number of years. And there was only one way that they could move, because there's simply demand going into COVID outstripped supply. And so a lot of these places, Victoria included, were dealing with historically low vacancy rates. And even during COVID, their rates didn't spike up that much. And a lot of that would be it's a market that's insulated by government users that haven't really been giving back a ton of space. But yeah, I mean, we've been seeing a lot of movement. When I used to do office leasing in the Valley, $12, $14 a foot net were great rates. Those same spaces are now leasing in the low 20s. So, and that's all happened in the last, call it 6, 7, 8 years.
Now, you guys are, from a project standpoint, you've got holdings in the Fraser Valley, you've got stuff in the BC Interior, Vancouver Island, as we mentioned, and stuff like that. You have a tremendous project, a very large project out in Mission there that has a commercial component and a residential component. I'm curious, during the pandemic, was there an increase in interest in a project like that because of the livability, where people were looking to get more value for their dollar and get into smaller communities, maybe further out from their workplace? Did you guys see a drive of that at all?
It was a very interesting project for us, because I believed in the market. It seemed like a total no-brainer to develop in Mission, because we'd seen huge development in the deeper valley, in Abbotsford, across the river, in Maple Ridge. You'd seen lots of new apartment buildings being built and I'm talking condo apartment buildings for sale. And these projects were pre-selling out and doing great business. And yet we built Mission, or we entered the market in selling condos in Mission. And Mission was a market that, when we hit the market in 2017, we were the first new apartment building for condo purposes built since 2001.
Wow.
So everyone else was booming, and yet Mission was like this sleepy area that everybody knew was there, but it wasn't part of the Fraser Valley, and it just didn't feel like it was. And yet Mission has a lot of similar dynamics to it, to Squamish. Now, it doesn't have the proximity to Whistler, which I'll give you, but they've got Sasquatch Ski Mountain, they've got Golden Ears Park, they've got lakes, they've got the river, they've got all this other cool stuff to do. So for the millennials that are about the whole work-life balance, it makes a ton of sense. And you've got the West Coast Express, which you can have a job downtown and yet you can live in an affordable community. So it was definitely a learning process for us. I can't say that we're going to rush to do another condo project, but it was great because we're huge fans of the village format. The park your car on Friday evening and not have to use it again until you have to go back to work on Monday, where you can walk to your shopping, to your restaurants. Everything you need is right there and is a short walk into it. And we've even taken a residential component in Mission. We're building an elevator that becomes a connector for them right into the shopping center, so they can access grocery and restaurants right effectively in their basement.
And for the listeners, can you elaborate on just the scope and the size of that project for them?
Yeah, it's about 100,000 square feet of commercial and 130 apartment units in 2 buildings.
And for the apartments, they were strata sales, correct?
The apartments were all strata sales. And in fact, there was a ground level commercial component at the bottom of the apartment building. And those were strata condos, commercial strata condos.
And then you launched it, 2017 you mentioned there. Did you see an increase in activity maybe on the commercial side or the leasing side, coming out of the pandemic now that there's been a population shift, it feel like?
Yeah, COVID created the shift for us actually, because initially the plan was that the site was going to be anchored. And I think as time progressed, we realized that anchor isn't really the right word, but there was supposed to be a casino on the property. And with COVID, with casinos being the first affected by the COVID shutdown, they had to pull back. And so what was going to be the key piece of our development at Outlook Village, they were gone. And our first goal at that point was to try and backfill that space or that user with a food anchor, because it's a favorite of ours. The food anchor proved to be unbelievably sustainable through COVID, and that really endeared it as a logical anchor for our site. And at that point, we were able to identify and put together a deal with Co-op. They acquired what was going to be the casino property. And as soon as word got out that was the case, everything shifted. We went from retail lease rates in the mid to upper 20s. Now we were high 30s, low 40s.
Wow.
So it was a game changer for the entire development, the interest. We had our choice of which fast food chicken group to go with and Asian cuisine. And it really took off from there. And the big groups, the groups that pay the greatest rents, in our experience, are your quick service restaurants, or as we call them, QSRs. They all came to play at that point. And it was amazing that Mission was on the map all of a sudden. So a lot of these groups weren't thinking about it. There was one shopping center that they were all typically going to, but that shopping center started dealing with exclusivity issues, and they couldn't accommodate a lot of these groups. So we went from being the leper to the queen at the ball.
So shifting gears a little bit, you guys have an exciting project coming up in Vancouver on Oak and 49th. Can you tell us a little bit more about that?
Yeah, so we had purchased a site years ago in Burnaby at Austin and North Road, right at the Burnaby-Coquitlam border. And at that point, we had purchased the site from 7-Eleven out of Dallas, and we went through due diligence on it. And we very quickly realized that it's almost one of these be careful what you wish for scenarios. When we had our first meeting with the city of Burnaby, they told us that the building qualified for an FSR and FAR, which translated to every FSR that you get. So say 3 FSR, you get to build 3 square feet of building for every 1 square foot of land that you have. So from our standpoint, we were more valley builders, and our bigger projects had sort of a 2.5 to 3.5 FSR. And we went and met with Burnaby, and they said, okay, this is a tower site right across from SkyTrain. We're going to start at 13. We just about fell out of our chairs and realized that put this project into the hundreds of millions of dollars. So we ended up selling the site, but through that relationship with 7-Eleven, they brought us a different site, and that site happened to be the Esso at the southwest corner of Oak and 49th, and so we acquired the site. We're just about to go to the city with design, but we're very excited about the design. It features a 2-story podium with the residential tower above. The city's focused on it being rental inventory, so they will be rental apartments. And we, again, are able to tie in this village format where the lower 2 levels, we're able to do a grocery store on the ground floor. So we're going to go through the process of identifying the right group for that. And we've already secured daycare to take the whole second floor. So again, the concept of families being able to go in, rent apartments that we believe we've come up with designs that are very right sized for the market, where they're efficient designs that still allow a high livability factor, where you can still fit in king size beds, and you've got a patio that you can go out on, and you don't have to get up very high at Oak and 49th to get views of downtown and the North Shore Mountains, or south over Richmond, and facing the airport as well.
Well, I'm surprised 7-Eleven still talks to you after you stole the site from them in Burnaby, probably for what you paid for what you got. So that's a pretty good relationship you got there.
Yes. We have the benefit, like I said, of having the partners that I have. We're able to be very mobile, and for a group like 7-Eleven, they're looking for certainty.
Yeah.
So when they decide they want to dispose of an asset, they want to know that they're dealing with a group that can work with them. And both Burnaby and this site at Oak and 49th have environmental concerns. Both of them have gas stations on the property.
Yeah.
And the fact that we were able to wrap our heads around the risk and remediation process really does enamor 7-Eleven to working with a group like ours that can make quick decisions and has a history of closing on purchase.
So you've been in this industry, started off as a broker. Now you're in the development side of the business. You've been around. You've seen lots of cycles through this industry. Where are we right now, in your opinion? And where do you think we end up in the next year or two? Obviously, we still have inflation issues. We're coming out of the pandemic. We've got interest rates, which feel like they just don't stop going up. What is your take on what's happening?
Do you think we could maybe loop in the governor of the Bank of Canada on our phone call?
We tried him earlier. He wouldn't take it. But just so you know, everything you say here, we fact check and we hold you to. So there's no predictions that don't go unclear.
Yeah, that's such a driver right now. I mean, we're really not looking. We are looking at adding good quality assets. We'll call them value add assets, where we can go in and do some lifting and add value in the property and keep it long term. But we're just not seeing those opportunities in the Lower Mainland right now. So I think from our standpoint and our experience, the cap rates, the capitalization rates or yield that owners of real estate in the Lower Mainland are looking at are very sticky. They haven't moved like the interest rates have moved. So in a perfect world, you want there to be your yields to be above the cost of borrowing funds. And in this current environment, we're just not seeing those sorts of opportunities. So I think from our standpoint, we need to figure out when our interest rate's going to peak out. And your crystal ball is as good as mine, Cory, but I think every indication we have is if we don't see another quarter point bump in July, we're going to see it in September.
Yeah. And
the goal or the hope is that that's going to be the top, and that we then go into a long waiting period, which could be as much as a year before we start to see a relaxation. But most of the contacts that we have on the banking side are fairly confident that by the time we're into 2025, that we should be back into, or hope to be back into, a normalized interest rate range of, say, 4 to 5%, as opposed to where we're at right now on the commercial side, where you're in the low to mid 6% range for conventional debt.
Yeah, no, I agree with you on that. I think we've been kind of echoed the same thing from a lot of people we talked to, and I think we talked a lot about this on the show, about how if you are acquiring assets right now in this environment, they've got to have a clear path to a value add or something to that effect, that you can get revenues up, because the interest rates just don't make sense with the cap rates. You mentioned there that it's tough to find stuff in the Lower Mainland here. You guys have great assets outside of the Lower Mainland. What markets are you guys excited about, or where are you guys particularly looking right now, all things considered in the market conditions we're in?
We like the interior. We like Vancouver Island, but quite frankly, that the market that probably has us most excited right now is Calgary. We're also looking in Edmonton. We prefer to be in primary investment markets. We have gone and will look at secondary markets. But from our standpoint, we really like what we see in Calgary. We found that Calgary, from an investment standpoint, has been responsive to the move in interest rates. So you are still finding a lot of opportunities in Calgary. It's one of the fastest growing cities in Canada, and it's resilient. They took it on the chin with oil, but really they get up every morning and they work hard. And so we like it for so many metrics. Well-educated, young average population, growing. It ticks off a lot of the metrics that we're looking at, but most importantly, from an investment standpoint, we're able to look at a positive correlation between lending rates and yield or cap rates.
Is there any specific asset classes over there that you guys are focused in on, or any specific areas within the Calgary area? I know one area, like the industrial area that a lot of people talk about, is Balzac outside of the ring roads there. Is there any particular asset class or area you guys like?
I think we're the same as most of the astute developers that we're talking to right now, that industrial, again, because it proved to be such a resilient class through COVID, is at the top of everybody's wish list. So I would say that industrial and food anchor would be our favorite two choices for sure. If we had to put our finger on just a few. So I think that those are, and emerging markets like Balzac absolutely would be on our radar. We just saw an asset, or we're looking at an asset in there just yesterday.
Gord, we know you're tight for time here, and we appreciate you taking it. But before we let you go, we have our 6-pack of lighthearted questions we ask all of our guests. Do you have a few more minutes for us?
Of course.
The 6-pack is powered by our great friends over at Red Point Law.
Oh, the guys at Red Point Law are fantastic, Cory.
For all your legal needs when it comes to commercial real estate, visit them at redpointlaw.ca. All right, Gord, first question up. Favorite vacation spot when you find the time?
Has to be Maui. Kihei.
Oh, Kihei and Maui. Maui's come up a few times on the show. It's good choice.
Yeah.
Good choice.
Good beaches.
So unfortunately, you found yourself on death row. What's your last meal?
It's a good question. I'd be torn on a couple, but I think I would have to. During COVID, my eyes were opened to omakase. I don't know if either of you have.
No, tell us
tried
about it. No, tell us about it.
So omakase is it's a Japanese prepared dish where I think the term converted to Japanese is "I leave it up to you," where you put your taste buds in the hands of a Japanese chef, and they bring out individual, specifically catered items. I had no idea what I was eating, but everything that I put in my mouth was just unbelievable.
Now, is there a certain restaurant that you went to that you found this at?
You know what? I'd have to look up the name of it, but it was on Granville Street,
Okay.
And it was amazing.
Sounds great.
We'll add to the list. Favorite band or musician?
It's a little cliche, Cory, but I've got to go with U2.
U2. Well, that's great. Great choice.
Yeah, I've grown up with them, so I mean, when I hear "With or Without You," I go right back to being a kid again and listening to it, and love U2.
I'll second that choice. Good choice.
Awesome. All right. What's one book you recommend all of our listeners read?
I am not a huge reader. I love audiobooks, but I would absolutely recommend The Richest Man in Babylon. I know that there's been a lot of books that came out after it, but the message is still the same. It's compound interest, the benefits of compound interest, but it's done in a very playful, biblical style format that, not that I'm getting religious here, but it goes back to biblical times. And it's just about how the richest man in Babylon came to be the richest man, and he was self-made. and it's just a very playful format.
Interesting one. I don't think we've had that one before.
No.
We'll have to add that to the list. Number 5, Gord, you might have already answered this, but you're sitting in a bar, you've had a few drinks, someone throws a karaoke mic in front of you. What song are you singing?
Ooh. Cory, I need to apologize. It's not Nickelback.
No, you know what? My
Thank
fingers
God.
my fingers have been crossed here, Gord, waiting for you to say. Like,
You know what, though?
How you remind me?
What, though?
Yeah.
I don't think I'm going to disappoint you.
Okay, go ahead.
I'm going to go with Every Rose Has Its Thorn by Poison.
Oh, that's a great choice. I'll second that choice again. We have U2, we have some Poison.
But I'm not going to break into song unless tequila's involved, though.
All right. Well, what we're going to do, Gord, is to celebrate every guest we have on the podcast. We take them out for drinks and tequila, and we secretly turn on the recorder on the phone. So we'll get you before the day's over. Don't worry.
All right. Last question. What's something you've spent $1,500 or less on that has made a positive impact on your life?
You know, I'm going to make this easy because it was actually $100.
Okay.
Oh.
And that is one of my favorite things to do is I've gotten into this whole cold plunge thing where
Yes.
a couple friends and
Yeah.
I go and jump in the river at 30 foot in Lynn Valley. And the $100 money that I spent was on water shoes
Oh.
Okay.
because
Okay.
it's quite rocky down there, and it is magic to not have to wince at every step as we get in and out of the river.
Right. And are they insulated at all? Because I know that's the first thing that goes when you're in a cold plunge is your toes start to.
Yes, not a lot is insulated, but my feet are.
There you go.
Oh, I know a few people that do the cold plunge thing that swear by it. They
It's
said
amazing.
Yeah.
You've obviously done it, Melissa.
I have.
There you go. There's your answer there. Gord, how can our listeners find out more about yourself and Elevate Developments and all the great projects you guys have going on?
They can reach out to me on email, Gordon at Elevate Corp, CORP as in people.ca.
Excellent. Well, Gord, once again, thank you so much for taking your time out of your busy day to join us today. Tell us about all the projects you guys have going on and sharing your thoughts and opinions.
Thanks, Gord.
Thanks, Cory. Thanks, Melissa. Take care.
Thanks, Gord.
too.
Take care. Bye-bye. There you have it, folks. Our interview with Gord MacPherson. I thought it was great. His project at 49th and Oak there, like, you know, we've obviously talked about it, but I didn't realize the size of scope it was.
Yeah.
Could you imagine buying a site in Burnaby like he talks about, thinking potentially that you have a 3, maybe a 4 FSR, and
Yeah.
the city pretty much tells you can build like almost 50 stories?
Yeah.
If there's not a moment in your business career that you back up a dump truck to put all your money in, that is the moment there.
That's the one.
That is the moment. I'm surprised 7-Eleven called him after. Maybe Gord hasn't told 7-Eleven what's happened to that site.
Hey. you never know.
Let's hope that 7-Eleven doesn't listen for Gord's sake, because they got more deals going on.
Just the 7-Eleven, whoever they are.
Yeah, the 7-Eleven. I think they're in Austin, Texas. And Nickelback, I looked up,
No.
is there like September 25th. It's a Saturday.
All right.
I could go down there on behalf of Gord, see if I can find him another property,
Okay.
and catch Nickelback.
All right, Cory. All right.
All right. You've been laughing at me in my misery this whole time, so you want to get me off. I understand.
All right, Cory. How can people get a hold of you?
People can reach out to us anytime at our Vancouver office at 604-428-5255. Let us know what you're looking at, and we'll do our best to put you in touch with the best broker in the province. They can send me an email, Cory@williamwright.ca. Love talking real estate. Or they can visit our website, williamwright.ca, sign up for the latest and greatest news. And for everyone who wants to sell their house in a multiple offer bid, Melissa, how can they get a hold of you?
You can call me at 778-869-4477 or email me at melissa@vancouverrealestatepodcast.com.
Excellent. Well, thanks so much for listening, guys. Another exciting episode next week.
Subscribe today.